the first 4 years of the company, there were $100,000 in the bank. That was it. That's what we started with. That's all we had. And so you had to get really creative.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show.
Joshua, thank you so much for joining me today. Super excited to chat. All right. You are the co-founder and CEO of The Tie, which is the leading provider of information services for digital assets. A lot of people say it's kind of like the Bloomberg terminal of crypto. And you guys service, hundreds of institutional clients and actually are a profitable company, which in crypto is obviously very rare. And, congrats to you. That's incredible. So I was going through your LinkedIn and it looked like you got out of college, were a consultant for a brief period of time, and then just started The Tie. So tell me about that whole journey.
Yeah. Well, first, thank you for having me on. Excited to be here. So I consultant is a strong word. That was technically my job title. My responsibility were a little bit more on the customer success, customer service side. Did a little bit more password resetting at my first job than I did actual consulting. But yeah, I graduated from McGill. I took a job working in post-trade settlement technology, which is materially more boring than it sounds, and it sounds riveting. This is 2017. And I was, kind of day trading crypto. This is when, guys like John McAfee and others were tweeting about, tokens, and they'd go up 400% an hour. And I'm like, somebody has to make sense of this data. Basically, worked there for, 8-9 months, quit my job to start The Tie full time in, December of 2017. Really with the goal of kind of, setting out to make sense of all the nonsense in crypto. And there's still lots of nonsense, but if you believe it, there was even more nonsense back then. That's kind of how we got started. It was just me when we started. My co-founder joined about 9 months later, had very little money, and basically operated as a bootstrap business for the first, 4 or so years, really trying to figure everything out before we were actually able to raise capital. And it's been 8 years, like so much has changed over there, but really started as an idea when I was, 22, and, now we're a 70 plus person organization.
That's crazy. Okay. So the amount of, cojones that takes to just be like, all right, there's a big problem. I see, I want to make a solution for that. And, it didn't sound like you had a lot of experience in it.
Absolutely nothing, by the way.
Right.
You're just looking back at the early conversations, and I still don't think that I know that many things, but I definitely didn't know anything back then. And, we actually started originally as a free retail platform. But there's a few people that still remember the free retail website that we had, but the product was just too sophisticated for retail. And, we ended up pivoting into institutions like 6 years ago at this point.
So take me back to the early days. You were bootstrapping and just trying to, the original thesis was like, hey, the data in crypto is so bad, and just the tools are so bad, and the information is just so...
Well, so it originally started, and we've come a long way from there, but it originally started as a sentiment data platform. So originally the focus was on social data because, one, on-chain data really wasn't a thing yet. It was really social focused. No one was investing in 2017 based off of usage of anything. It was, what are people talking about? What's hot? What are influencers saying? And so we started as really a social kind of aggregator. Here's the top assets on Twitter today. This is what people are most bullish, bearish on. And we added different kind of features over time, but that's really how we kind of originally started. That's like what the platform looked like in 2018.
And it's crazy. You said that the on-chain kind of metrics or economy wasn't even really a thing. Can you explain more of that?
Yeah, at that time, it was really, you had like Coinmetrics and a few others that were very early to on-chain data, but it was very simple metrics. It was like, how many transactions are there on this network? How many active addresses are there on this network? It was very, very simple. It was none of, looking at, retention rates on chain, or looking at user flows or bridge flows, or, what are users doing, or there was no, and we can get into a lot more nuance, but there was no nuance to the data. And it's funny, like a lot of those metrics, looking back at it, were just super misleading. Like, people would show that there were 50,000 active addresses for Uniswap. That doesn't mean 50,000 people were using the Uniswap smart contract That just means 50,000 people set the token. An active address just means a sender of a token. And by the way, the market is still wrong on some of these metrics today. But the point being, it was very, very early. Like just in 2019, did people start to come out with like exchange flows and a few of kind of the earlier metrics that people were looking at. I still think sentiment is incredibly important, but obviously the market has matured a lot.
And you also mentioned that you were fully bootstrapped for the first few years. Your co-founder joined like 8 or 9 months in. Your co-founder's name is Ben, right?
Correct.
So what was your pitch to Ben? Like, hey man, I know I've raised no money. I'm trying to build this thing. Like, that's a tough pitch. How was it?
So Ben and I actually, funny enough, we've been, best friends for a while. We met in a summer entrepreneurship program in high school at Babson, like 10 years prior,
Wow.
and had stayed really close friends. He was working at a company called Tasty Trade, which you might know being that you're in Chicago. And he actually built like an options trade tracking platform. And long story short, he ended up leaving Tasty Trade to do that. While he was doing that, he started working with us part-time, and that thing eventually sold and he didn't need to stay on, and he was able to come on with us full-time. But it was really, credit and thanks to him for obviously coming on when I mean, neither of us took any salary for many years. Then we were taking, like $40,000 a year kind of things for a while. Right. And so, we, really kind of, bootstrap, but it kind of just happened organically and naturally.
So, okay, when did you start to get traction? Because you said it was initially free and then it was sentiment and then
There was no traction there. I mean, there was, a few thousand website views here and there. Really, we started to get traction. Actually, our first sales really started to happen around March of 2020. So actually right during COVID, we had, our first few institutional customers. We also really early had to get incredibly creative to generate revenue. So we actually told people we had a research team, and at some point we're selling custom research reports. I was writing 70-page reports myself. Um, I mean, we when you're bootstrapped, I mean, the first 4 years of the company, there were $100,000 in the bank. That was it. That's what we started with. That's all we had. And so you had to get really creative. And so we found, creative and unique ways to make money. But really, I mean, like March 2020, kind of an inflection point. We launched institutional product. We started to bring, or maybe a couple months before that, maybe like December 2019 to March 2020, started to bring on some institutional customers, started to do a few more things, and then, really saw our first hockey stick in, kind of during that 2020, 2021 bull market.
and at what stage did you and Ben decide, okay, we actually need to focus on institutions because, retail's not going to have the, they're not the ideal customer. They don't have the,
I would say about 2019. Yeah. As long as we started to pivot and kind of focus more on institutions. And 2020 really rolled out like the first version of the terminal. 2020, like early 2021 is really, it's been about 4 or 5 years that we've had that product live. And it's iterated. There's been three or so different versions of it, but that's really when we kind of rolled out the first product and decided to go in. And, that was in 2021. You started to see it a little bit. You had, Paul Tudor Jones come out and talk about Bitcoin. You had a lot of kind of these early, this like early rumbling of more people getting involved with the space. There was a huge number of crypto hedge funds that launched, as I'm sure a bunch of crypto venture funds launched as well. But yeah, it was really, kind of seeing that take shape and realizing there was really no pure institutional solutions. So there was so much software that was both trying to service retail and institutional, and there still is. There's all these software products that have a retail tier and an institutional tier. I think it's very difficult to serve both well because the customer base is very, very different.
right. So, I've heard of you guys as Bloomberg of crypto, specifically Bloomberg Terminal of crypto. Is that a fair way to talk about you guys, or how do you describe what the tie is?
Yeah. So no. So I mean, I like to think of us being the leading information services provider for digital assets. So we operate in 3 core areas. The core is institutional, and so our core product is the terminal, which you can think of like being similar to a Bloomberg or FactSet, and that's an all-in-one platform. Our core clients on that product are hedge funds, asset managers, banks, OTC desks, market makers, prime brokers, some VCs and other market participants. The core problem that product solves is that information in crypto is just siloed across thousands of disparate sources. We aggregate everything together. So market data, derivatives data, sentiment data, blockchain data, news, research, private company, NFT, governance, developer data. all into a single interface, which services hundreds of institutional clients. I would say we probably, at least among all the data companies, have I would assume the most TradFi customers. So we have a lot of traditional hedge funds, banks, asset managers, like a lot of the large players in crypto, but also a lot of the kind of larger funds that are operating in the space. So that's our core. We also have APIs that we sell to quantitative hedge funds. So we have a sentiment API, a news API, a blockchain data API, a developer data API, and a bunch of other products that are being sold to quant funds. That's kind of number one. Number two is data redistribution. So we license our data to a lot of other platforms. So, for example, if you go into exchanges or other platforms, they'll have our news or they'll have some on-chain data from us or different things. That's number two. Then the third piece of our business is what we call corporate access and advisory services. And that's basically the piece of our business that works with token issuers. And we offer a range of services there. But a lot of people now know us from the events that we do, which are really modeled around sell-side corporate access style conferences, where really we're trying to connect. We basically built this massive network of institutions. We provide a lot of services to help institutions and tokens kind of connect and build relationships that, we're not operating an investment bank, but we're offering, kind of like conference style things that an investment bank would offer.
That's so cool. Okay. Are we able to take a peek at the terminal? If not, no worries. I'm just curious because if not,
I can give the very, very, very high level kind of overview of what the terminal is.
that'd be awesome.
Um,
Love to see it.
I mean, really, our core goal with the terminal is to build a single platform that aggregates everything that exists in crypto, right? And so, like you can build dashboards and things that go across so many different data sets, sectors, things like that. So for example, here's just a sample of a dashboard where I have, an asset screener, I have a news feed, I have a chart. I've actually linked all those things. So as I click on ETH and XRP and BNB, clicking on random assets, no one in the comment section, comment here. But, I can update, my news feed and my charting, with those assets. But I can see anything I want, from upcoming token unlocks to significant on-chain events to CME versus crypto native basis to, developers switching chains to, equity watch lists to, trading volume by exchange and everything in between. And so there's just so many dashboards and things that we aggregate. Like if you want to compare, usage and transactions and fees across 50 chains, if you want to look at stablecoin dashboards and understand stablecoin flows, if you want to look at sentiment dashboards and see what people are talking about on, Twitter right now, what's dominating the conversation, what are people positive, negative, neutral on, like anything you can really think of in the space. If you want to look at RWA dashboards, options, analytics dashboards, you name it, all of that data is available within a kind of single consolidated platform. What's cool is we have hundreds and hundreds of widgets and things that people can go and they can add to their own dashboard. So if they want to add, things on derivatives, we have 53 different derivatives widgets. If they want to look at futures data, market data, mining data, you name it. And what's really unique and what's really cool about our platform, we don't want to be just the data provider. We really want to be the platform. And so one of the things that we allow our clients to do, which is very cool, we actually expose all of our data in SQL for our clients. So our clients can actually code against our data and build whatever they want. We also allow our clients to bring in their own APIs or APIs from other data providers. So it's really about this experience of being the platform. So for example, if you really liked, insert data provider 1, 2, and 3's APIs, you could bring all of their data into a single screen. And what's really cool is we've mapped how every data provider has called every single token. So all the unique identifiers. So if you want to do a join, like imagine you want to create a chart that has data from us or Nansen or Messari or Dune or any of these other data providers, you can join that data together and create single visualization. So again, for us, it's about the workflow and the platform. It's not necessarily just about the data, though I think we've built more data than anybody else as well.
All right. So how did you, there's so much information there. There's a lot of optionality. How did you go about, what was the initial steps when you were first building this and decided to pivot more towards institutional versus retail? What were those first items that you're like, okay, well, we're going to need prices, we're going to need this. And because now it's just like this massive.
Well, kind of, we had a retail platform that looked a little bit more institutional than it did retail. And so we kind of had a base already and we had a lot that we could start with. Over time though, I mean, we built a base of hundreds of customers, hundreds of funds, a huge percentage of crypto market cap is accounted for by our, kind of our customer base. And we listen a lot. We take a lot of feedback. And we've just built a tremendous amount. One of the biggest things I've learned listening though, is don't listen to your customers too much because they ask for too much and then they get overwhelmed by the amount that you have. So we're actually kind of at a point now over the last few months where I wouldn't say we've paused adding new things. We add new things every single week, but we're really focused on there's so much here. How do you really unify and create an amazing user experience, a lot of discoverability? And so we've been doing a lot with AI where you can ask one-off questions that can access hundreds of database tables. You can build charts and tables using AI and stuff like that. So, a lot of what we've done over the last few years is really, hey, what do you want to see? And also I think a lot of it is trying to figure out what's signal and what's noise. And as you know, there's so much noise in crypto. And so we have to ignore some of the things that pop up. Like, we spent so much money building NFT data and we did so much and now no one cares. Right. And so the challenge is like, okay, a new trend pops up. It's going to take us a few months to build something related to that trend. Is that a long-term trend or is that a short-term trend? And so a lot of the stuff that we're really trying to figure out is, how do you build things that are universally useful and constantly useful? Because if you're constantly trying to, and look, we roll out dashboards on different topics all the time, but the problem is making sure that you build a platform that's as usable by as many people as possible. Whether or not those people are, a bank that's newer to crypto or, one of the most sophisticated funds of the space that's trading 500 assets.
Yeah. Can you talk more about your customers? I mean, obviously you can't get very specific, but can you just broadly say, just tell me some information about specifically the TradFi players? It's interesting to hear the crypto players, but they're probably more, I don't know, more known in my world, but the TradFi players, what are they primarily? Because I would assume they're not trading, or are they just purely looking at it for informational purposes? This is like the banks, but maybe there's some hedge funds that are trading or.
Yeah. So institutional is a giant word and everyone in crypto uses it in the very broad, manner. So yeah, I mean, on the hedge fund side, historically, most trading of crypto from traditional hedge funds has been out of GP capital. It's not LP capital. So it's all out of the family office. That continues to be the case for many of these traditional funds. A lot of them are just doing things like the basis trade. Some of them are just doing the basis between CME and the ETF. But some of them are definitely getting more involved. Some of them are trading, dozens of assets, but generally it's out of the family office. If they're trading balance sheet capital, not balance sheet, if they're trading LP capital, it generally tends to be a little bit more limited what they're doing. But that's changing. That's definitely changing. A lot of folks are trading the ETFs that wouldn't otherwise trade crypto. And I think as we get a Solana ETF and an Avalanche ETF, and we will soon live in a world where every token has an ETF and there are multi-asset ETFs, things like that. I mean, that world I don't think is very far off given the way the regulatory landscape has been changing. And so, yeah, that's on the hedge fund side. On the asset management side, a lot of the asset managers actually have their own hedge funds. Some of them have crypto-only hedge funds, and they're doing just as much as any crypto native fund would do. There's multiple of them that I can think of. Some of them are figuring out which new ETFs to list. Some of them need to give color to their advisors. So if they have ETFs, they want to give color to the financial advisors on what's going on in the market. They want to produce materials. That could be a use case. On the bank side, it really depends, to be honest. On the bank, a lot of them are trading ETFs. Their desks are trading the ETFs. Some of them are, thinking about crypto trading more broadly. Some outside of the US are already doing that. A lot of them are thinking about custody. So it's a huge range of things, but just like, look, I don't know, if you've used like a Bloomberg or a FactSetter or something, like that before. You don't use 100% of the platform. You know how to use 3%. It's the same thing with our customers, right? Like every one of our customers is going to use different things, but somebody's going to use 10% of the platform. Somebody's going to use 15%. No one's using anywhere near 100%.
Yeah. So how do you go about, you did mention like their customers are constantly giving feedback of what they would like to see on the platform and have. How have the needs changed of the different institutions and entities on your platform? Have they said, hey, because I as you mentioned, if you're trying to facilitate every single desire that people have, that becomes unwieldy. It's like, I can't manage this thing. So how has that evolved over time?
Well, people are asking us for a lot less now, but that's because we've added a lot of stuff. So I think we just naturally added a ton of stuff. So we're not getting as many new kind of feature requests and things like that. Um, a lot of the feedback we're getting is really, make this easier for me to use and digest and stuff like that. We've been doing a tremendous amount. We have some big announcements coming out in the next few months there as well. Um, but yeah, I mean, it's constantly evolving. It's constantly changing. I mean, a lot of people really do care about the ETF right now. So we support ETF data. A lot of our clients care about equities, crypto equities. So we actually support equity data on the platform as well. So if you want to look at, Marathon stock or your Core Scientific or MicroStrategy, the reality is, crypto funds are doing, venture investments. They're doing liquid venture. They're trading. Sometimes they're trading equities. Sometimes they're running systematic models. And so just the range of things that people need is super broad. But I would say the real way that we are kind of different than a lot of others, we really do have more of the hedge fund customer base. Like that's more of our bread and butter, is really people looking to make decisions right now. Not so much like a lot of the other research providers that are like, we don't write research anymore. I decided to give up on that after, we got enough money in to actually fund the business. But we're not focused on like writing deep dive long form research or, building like very topical one-off dashboards. It's really, the focus is, how do I help somebody identify an opportunity that they can execute and make money on right?
Okay, yeah. So you mentioned fundraising, and you were bootstrapped for the first few years, and I think you raised like around 10 mil, maybe it was 9 mil or something like that. I forgot. I saw on Crunchbase, but was that your only round of funding? And then also, how did you decide to make that change?
Yeah. So we've raised one round ever. We've raised $9 million. I don't know, at this point, probably 3 or 4 years ago. We weren't raising. The TLDR story is, somebody was diligencing one of our competitors, did a call with one of my clients, and the client was like, you should talk to Josh, which turned into them connecting me to a bunch of the big like Sand Hill Road funds that gave us term sheets. I decided I didn't want to work with one of them because I was bootstrapped. I was used to the bootstrap mentality. They were like, okay, we called it a Series A because had enough revenue. Like, it didn't make sense to call it a seed. And so, we got a bunch of term sheets. I was like, I don't really want to do this, like raise a Series A. Then they were like, let's raise a $50 million B in 6 months. Then this, like a C right after. And I was like, I don't know if the TAM is necessarily there. I don't want to go this all in. I don't want to, do that. So we went out, we raised money from about 50 customers. So everyone who participated in a round, I mean, we have names that we announced, but a lot of it was like individuals at customers and things like that. So, our cap table is very much, people that are using us, people that work with us, customers of us, things like that.
That's incredible. Okay, so your mentality on VC is, I don't know, I don't want to say it's negative, but the style that you were presented with, it was like, that's totally unnecessary. Like, we don't need that. Why would we go about that?
Well, but also, can you imagine going from, we had 100 grand to, we were getting term sheets for $20 million plus. And I was like, I don't know what to do with this money. So, and also I was like, I don't need to dilute this much. Right. So we decided to do a smaller round. And, my hope then was we don't raise again. And my hope still is, we don't raise again, right? That we're one.
Very cool. All right. So you did mention AI. How do you think AI is going to impact your business? Because, you mentioned that people are using some percentage of the platform, 5, 10, 15% or whatever. But if I have this really smart AI assistant that I can type questions to, then it can utilize potentially more of the platform and kind of distill the information on there. Yeah. So how do you expect it to materially change your product or kind of the usage of your product? Or do you think it's going to be minor?
Ones. So TradFi firms can't use AI. They can't use AI. And so some of them can, but we have to, depending on the customer, turn on or off features. Just, they're very sensitive around data. And if something like, unless it's self-hosted, they're very, very sensitive. So it depends. But I think over time, hopefully that changes. And we can also show like AI summaries and things to them, even if they're not directly using our AI, right? And so the way that we think about it is, AI is an assistant to help you get somewhere. So for example, when you're building dashboards, for example, if you want to use our data in SQL, you might not know how to code. So we have a feature on our platform where you can ask a question in English. We'll figure out which data sets to pull from. It can stitch multiple data sets together and then create charts and tables, other visualizations for you. But if you're more technical, it will output that Python script So you can go and you can adjust and edit that Python script and make whatever changes you want to it. We also have like an AI chat where we've indexed over the last 7 years, I don't know, millions of news stories and information analytics where you can go ask, one-off questions, like, hey, what's the latest research, on Eigenlayer or, who is invested in this round or whatever the question might be. And so I think of it as, instead of someone having to go pipe in a bunch of APIs, store that data, have an analyst do something, it's more like, hey, let's create a much quicker pathway to get to the answer to that question. But we're also thinking about like even in configurations of things, how do you make it like easy to configure things using AI? So if you're looking at if you want to build a news feed instead of just you having to pick all these topics you want, being able to write a sentence. And so it's really like an assistant as opposed to I don't think that eventually all information is going to be consumed via AI. I think it's more as and maybe it will, but for now it's more of an assistant for us.
Have you noticed any kind of interesting or unusual, you build this massive product and customers are using it in a way that you had no idea that they would be using it for? You're like, wow, I cannot believe that activity is happening. Just surprising.
A lot of users really use our asset screener because we support hundreds and hundreds and hundreds of different metrics. And I guess the amount of time people actually spend on that product is quite interesting to me. But I mean, we have so many different users. We have investment banks that are users. We have some fund of funds that are users. We have VCs that are users. So it's just so all over the place that nothing
surprises you.
Yeah.
What about any sort of like data signals that, okay, so there's been an argument for as long as I can remember, but that fundamentals do matter, fundamentals don't matter in crypto. What have you, do you think that fundamentals matter, and do your customers, take from the data that they're ingesting?
Here's the challenge. Fundamentals are only fundamental if people agree on them, right? And so the reason something is kind of a fundamental is because people agree on it. But if one person says this is a fundamental and they're the only person saying that this is a fundamental, then we're not going to see consolidation to, vet measures of market value that matter based off that fundamental. So I think the challenge is we're still figuring out fundamentals in crypto. And I don't think retail cares about them. So you have lots of different chains out there that have no users and no smart contracts that are, trading at very high, market caps. And you have other chains that have tremendous amount of usage and tremendous amount of traction that are not. Or tremendous TVL. And so I still think, I think we're getting to a point where like people want to see the amount of users, they want to see the amount of fees. Like it's starting to matter a little bit more, but I do think that the market still in a lot of ways does outside of Bitcoin and Solana have a lot of retail involvement. And until retail starts to view things in a similar way, I think it's hard to really get there yet. But I do think in the bear market, we're seeing it a bit more where, outside of, some projects with large communities, if things don't have users, they're more that than anything else.
Totally. Yeah, no, it's interesting. It's like fundamentals themselves are kind of a meme. It's like, well, it's mimetic in the sense of if you believe in them, other people believe in them, then it becomes true. So it's pretty interesting. So how do you think about building a moat within a business like this? Because as you mentioned before, lots of folks have tried iterations of like the Bloomberg terminal of crypto. And so, yeah, in your opinion, how do you go about just building the strongest moat?
I mean, I think the moat is the platform. It's not the data. I think a lot of data in crypto becomes a commodity over time. We are certainly building proprietary and unique data sets. We have a 7-person asset listing team full time that does stuff like we hand do all of our token unlock data. It's all done by hand. We're doing every single fundraising round by hand. There's a lot of stuff. We built our own. We're about to make a big announcement about a brand new asset taxonomy and classification system that we built all from scratch. Really, really been thoughtful about this. We've spent, months and months and months really thinking about how you build a taxonomy, how you classify assets, how you don't double count. And so I think you invest in the things that you can differentiate yourself a bit on, but it's really about building a seamless user experience. And for us, it's always been, or maybe not always, but recently it's been, we want to be the platform, not the provider. So we are a provider for a lot of data, but we also will bring in other providers where necessary and allow you to bring in yourself. And for us, the moat is the amount of time our users spend on the platform. So our average user across hundreds of clients spends over 3 hours a day on the platform.
That's huge. Wow. All right. So I know the events are a big strategy, a big part of your strategy. And you guys have had some really killer events. Like, tell me about that because I don't think of the tie as like an events business, but you guys have built a pretty substantial, like, I don't know, events. It's not a business per se, but it's a great funnel for acquiring customers. So you tell me more about that.
Yeah, as I mentioned earlier, all of our events are focused on being corporate access conferences where the goal is really connect capital and projects, right? And so that's really the focus of our events. They're very unique. Unlike other events in the space, we don't allow service providers to attend outside of a very limited number of sponsors. And so it creates a much more kind of private environment for people to connect. And people have really enjoyed them. I mean, we did the Bridge, which is our flagship event, in New York in November. We had 1,000 attendees and about 500 unique institutions show up to the event. And so, we do 4 events a year. We do 2 kind of side events at major conferences. Those aren't like big. We're not making huge amounts of money on those events. It's not the intention. But they're like, we did an event in Denver a few weeks ago. We had about 700 people show up, and everyone said it was, like the highlight of their week because it was the only place where like every institutional person in Denver was there. And so, as opposed to being kind of separated across all the other side events. And so the goal is like, look, at major conferences, just create a private place for people to connect. We're doing another event that's, open to Tokens institutions in a couple months in Toronto across from Consensus. We're not even charging for tickets. Like but it's by approval because again, we're trying to curate the best kind of, group of attendees for those events.
That's so cool. Wow. All right. So, we hear the meme. The new administration is kind of very pro crypto comparative to the last one. And the meme is like, oh, institutions are finally coming in. And you would be the person to ask, are they?
Yeah, I mean, I think they are. I think asset managers and banks are starting to really come in. There was a tweet from Ray at L1D, which is one of the largest fund of funds this morning, where he said, I think they just brought in their 9th allocator into the fund, if I'm not mistaken on what the
Actually, it was the 9th pension.
the 9th pension.
Pension, yeah.
Yeah, but they're seeing family offices get, and like high net worth and others kind of get tired of the space. So yeah, I mean, I think seeing like these real institutional allocators coming into the space is a really big deal. I think once more ETFs open up, I wouldn't be surprised to see most hedge funds trading crypto, but I think they're going to trade them via the ETF. I don't think they're going to necessarily trade spot. I just think from a counterparty risk perspective, they're already piped, not having to worry about custody and other things. I think it's going to be easier for them to trade ETFs. And obviously it's not 24/7, but they're not trading 24/7 right now, right? Like they're trading during, US trading hours for the most part. So, we're seeing it. We're definitely seeing more engagement, but oftentimes it's like, it's a pod at a fund. So if it's like a 200 pod fund, it might be a pod or two that are testing crypto. But we're definitely seeing traction. I think banks are doing a lot more. I think SAB 121 being repealed is a really big thing. I think you'll see more banks custody crypto. And I mean, the asset managers, I think, have arguably gotten the most all in out of anybody. I mean, with all the ETF filings, tokenization, launching internal hedge funds and VC funds. So I think you'll continue to see that expand. And I think you'll see whatever asset managers haven't gone into crypto yet will join the party probably soon.
Yeah. So you mentioned most traditional TradFi players will probably enter through ETFs. How do you feel about that? I mean, does that, like, I guess from your business standpoint, you're like, we have ETFs, we have on-chain, doesn't really matter. But I guess from a person who's been involved in crypto for many years, like, do you feel any kind of way, or you're like, oh no, we'll get them eventually?
When I first got into crypto in 2016, the first thing I did, I went on my Fidelity brokerage account and I typed in Bitcoin, right? And so, and I think I bought GBTC actually originally before I even touched spot. At some point I bought it when I was trading at a discount to NAV actually. So it was there was a very small period of time, but the point being is ETFs opened the world up to crypto. And you don't necessarily care, like you don't think about when you're buying your stock, how it's being held and where it is or anything else, like whether you have a physical stock certificate or now you don't anymore. So I don't know. Like I think, look, if people are buying the ETF on the back end, BlackRock or Fidelity is buying spot. So, and there's such a distance between trading the ETF and trading on chain. So whether you're trading on it with a centralized exchange or with an ETF, it I'm sure I'm going to get grilled by somebody, but to me, it doesn't really matter that much. I think getting people engaged on chain and involved on chain is a whole other kind of step. And I think we're relatively far away from traditional funds engaging on chain for the most part. I mean, a lot of crypto native market makers just market make on centralized exchanges, so they're not even market making on dexes, right? Like,
True.
like I don't know if you guys have ever done anything on chain, but like a lot of funds in crypto don't even do things on chain. They're just doing things CeFi.
Totally. Yeah. So, but from a business standpoint, doesn't matter to us. But from a personal standpoint, you might have a
You're trading Solana. Who cares if it's in an ETF, ETP, or it's a token? Like same thing. Like people want to tokenize equities. You're trading Apple, whether or not it's a token or you're trading on your Fidelity account. You're still trading the same underlying asset.
totally. So this goes a little bit towards that institutional adoption question, but are you able to give us a hint of how your year has been since, January? Because, that'll give some indication as to like, oh, Josh is having an insane year. Therefore, probably true that institutions are actually coming in.
I mean, we saw it at the bridge. We hosted the event right the day after the election, which we did intentionally. And it was really a bet. It was like other people are going to be very happy for various, but
That's great. It's great.
yeah. So we saw it. I mean, there were hundreds of funds that showed up. There's definitely interest. There's definitely engagement. It's very funny. The institutional sentiment and retail sentiment are completely on opposite sides of the spectrum. It's not even the same ballpark. So, I think institutions are taking this space very seriously. I mean, I think they've seen guys like BlackRock and Fidelity that have made a ton of money on crypto now at this point. I mean, I don't know what the latest AUM numbers are, but they're making tens of millions of dollars in revenue off of the ETFs, and now they're doing more. They can also get grants from foundations to launch, tokenized treasury products and do all sorts of other stuff. And so, yeah, I mean, I think that's going to continue to grow. But it's never. I've been doing this for so long. It's never like there's one thing that happens and then boom, every single person comes in. It's always 10 step backwards, or 10 step forwards, 9 step backwards, right? Like a fund was trading crypto. Like one fund that we know, it's a big fund. I'm sure people would know it. Maybe a top 20 fund. They were trading crypto in 2021. One FTX collapsed. The GP there was like, get my money off Binance. I don't feel comfortable being on this exchange. But now they're totally trading and they're all up and running again. And that's been within the last year, right? And so, things change and, people shut down and they reopen and things like that. But I think broadly speaking, I mean, the institutional interest is growing.
All right. So you mentioned that you've been in the space for quite some time building. Tell me about the hard times, because you've been been through some bear markets and you've been through a lot of turbulence. So tell me about like some areas, throughout the years that were just tough, and how you maintained confidence and kept building.
We've been very lucky in that we're purely B2B. So we actually never, maybe we've had a month where our revenue has decreased or 2 months where our revenue has decreased over time, but it's never been, we didn't see a 70% drop off in revenue at any point, but we definitely did see really difficult time selling new products, right? So even if we weren't seeing huge drop off in customers, I mean, we saw drop off post FTX when funds collapsed, they went out of business, if they ran out of money, they ran out of runway. And certainly we've seen churn over time. We've seen that with, some of the token issuers where their token goes down a lot and that impacts their runway and things like that. But yeah, I mean, when I raised the money, it was 21, things were looking great. We kind of hired, a lot, we overgrew on the sales team side. We never did massive layoffs or anything like that. But, as people left, we decided to just keep operations a little bit more lean. We kind of realized, look, the TAM is what the TAM is. People I think often overestimate the TAM and how many people you need to sell into the market, but it's a very small market, right? There are, at its core, funds that have more than 50 million in AUM. I mean, there's a few hundred of them, right? The market's only as big as you think it is, right? And so I think, that the biggest takeaway that I learned in bull markets is I'd rather, the pond only has so many fish. I'd rather have less fishermen fishing in the pond and make sure that my fishermen are catching more fish.
Totally. All right. So yeah, talking about hiring, how do you as a founder think about hiring? Because I think that's one of the most crucial skills that founders can have. How do you go about doing that?
That's a great question. I actually haven't been hiring that much recently. My team's been hiring a bit more, and I trust my team to do that. Yeah, I mean, I think it really depends. I think now one of the biggest takeaways and lessons I've learned is it's better to have less people that are really skilled and really experienced than a bunch of junior people, in many different ways. Um, where, we're at a point now where we've kind of hit a little bit of like takeoff, and it's really, how do we get from, like we've gotten from A to B and B to C, but how do we get from C to D, right? And that's really bringing in, senior people that really know what they're doing, that know what they're talking about. I think it's a really important skill set to be able to talk to both TradFi and crypto natives. And so I'd rather actually hire somebody who was TradFi but's been in crypto for a few years and can now speak crypto, because they could still go back and speak, more of a TradFi. And as we build product, right, we're building product, but at the end of the day, if we're just building product that serves crypto natives, like the cap of the TAM is so small, you have to, even if the market's not there yet, you have to be building with this like broader TradFi, kind of color in mind. And so I think thinking about that experience is super, super valuable. Generally, we're not getting any good job applicants from like a LinkedIn or, Indeed. It's all from like crypto job boards. So if you're thinking about getting into the space, look at some of those different job boards that are out there. Generally speaking, we have a little bit more confidence when somebody does that. And we'll also do things like we'll have people share their like DGen score on ETH. Like it depends on the role, right? But like we'll ask about their crypto native questions. We'll ask them what their favorite coins are. Generally speaking, you can weed people out very quickly depending on the answer to that question. And so we'll pre-screen on like, some questions that will give us like, who are your 5 favorite influencers to follow? And if BitBoy is number 1 on that list, it's probably not the right person you want to hire. If you say, my favorite thing is the Zima Red podcast, then we're like 100%.
There we go. There we go, baby. It's so funny you mentioned the coins one, because that's a great. You instantly can weed out someone if you're like, hey, what are your top 3 favorite coins? And they're like, well, I don't want to BitConnect and XRP. Like, yeah.
Hey, we're not attacking coins.
Yeah. That was just an example. I love BitConnect. A big fan of XRP, of course. But cool. Okay. So how would you say that how would your team describe your management style? If they're like, oh, Josh manages like this way, like what would that be?
I'm very engaged with a little. I've definitely taken a step back. I think I've also learned a lot about being a manager over the last 2 years. Keep on, I started this company at 22. I had no idea what I was doing, and now I think we're getting there. But I think it took a lot of time for me to trust people, and there's definitely parts of the organization where there's a lot of trust. We're letting people run through things. My management style, it depends on the team, but with like our sales team, for example, a lot of it is relatively hands off, but very hands on training. So really spending time understanding the different customer segments, different customer bases. What is a market maker? What is a quant fund? What is a prop trading firm? What are the roles within those organizations? What do they actually do? How do they engage with crypto? What are the features of our platform that can be relevant for them? So, I think a lot of what I want to do is empowerment, right? I can only do so much myself. And so, figuring out how to do knowledge transfer and empowerment is incredibly important to me.
That's awesome. Okay. So you mentioned the TAM of crypto native folks, it's not very significant, especially comparative to, it's significant, but for us, not comparative to TradFi.
I think for perspective, if you added all the revenue of every data company in crypto, you'd probably be below the amount of money that Goldman Sachs pays Bloomberg every year. Just for
that is insane. That is crazy. Wow. Okay.
Yeah. I mean, some of the bigger, TradFi firms are probably spending $150 million a year with the vendor of data, right? Versus, there's lots of crypto data companies out there that have, I'm not calling it any particular names, but there's one people that are at 2 million in revenue, or 1 million or 5 million or 7 million. You start, maybe it's a little bit higher when you add everything together. But the point being is we're so small relatively. And like this pie that we're fighting over is ridiculous because, okay, great. You got an extra 1% market share. You made an extra $1 million a year. Like that's not, it's all about growing that pie.
In terms of these TradFi players, how do you expect that to evolve over the coming years? Do you think that, they're, as you mentioned before, it's like 10 steps forward, 9 steps back sometimes in crypto. It seems to be that way. You're not expecting a big flood of TradFi players to come in and start using the TIE, but maybe an increased trickle that maybe turns into a
100%. It's definitely trickling faster now than it has been in the past. Yeah, I mean, I think it's going to continue, and I think TradFi is it's a little bit of a delay, right? Where it's okay, things happen in November, we're going to start seeing a lot in June and November, kind of thing where it takes a while. You got to convince your investment committee. You got to convince your board. You have to convince your LPs. I mean, one of our clients, which is a big TradFi fund, they ended up selling, or whatever. They ended up winding down their crypto piece. But basically, it was a giant fund. It was tens of billions AUM fund, and they had a crypto fund that had some amount of money in it. And one of their LPs was just like, no. And if that LP's got $10 billion in the fund and your crypto thing's got $100, then you're like, all right, it's not worth doing the crypto thing, right? And that's the problem with a lot of these large traditional funds, right? You take a $50 billion fund. One of the biggest problems in crypto is liquidity. Outside of Bitcoin, ETH, and Solana, there's not enough liquidity to trade a lot of these assets. And, or maybe I say Bitcoin, XRP, and Solana at this point, given how the market's, looking. But, you know what I mean? Like, outside of a few of these assets, there's not that much liquidity. And you start thinking about a large traditional fund, like, okay, they're trading $50 billion. Okay, maybe they could run in $100 million fund in crypto. And, if that fund doubles, maybe they're going to make $20 million. But on $50 billion, they're earning $2 billion a year in management fees. $1 billion a year in management fees. So you're talking about if it doubles, you make 20 million versus $1 billion a year in management fees. I think a lot of them have historically looked at that and been like, it's not worth the reputational risk. But I think now as BlackRock, is more involved with the space and Franklin Templeton and T. Rowe Price and, like Citibank and all these others, I think that legitimizes the space more and enables, it's all about reputation, right? Once the reputation of crypto gets a bit better and the LPs get a bit more comfortable, then I think more of these traditional guys can come and have size. But for now, they're like, look, there's a lot of opportunity. We're going to trade it out of our own partner capital. Or, I mean, all the prop trading firms are super active in crypto. Like, I don't think people realize how much Chicago controls crypto still today. Like, 50 to 70% of trading volume could still be on a given day the Chicago prop trading firms. And I'm not saying one in particular, but a combination.
That is funny. It's like, I don't know, people always say, oh, the cabal, like, the meme coin cabal or whatever cabal they're talking about. And really it's like, no, Chicago traders, like they could control the crypto markets. But
there's a couple of the prop trading firms in New York as well. And there's a few in Asia and other places. But yeah, I mean, the prop trading firms are really driving the majority.
They've been involved since, like, I don't know, the earliest of early days, right? So yeah, it's been.
I mean, as an example, if it's just a public one, DRW started Cumberland in 2015, right? And so, and a lot of people think that a lot of those guys spun down their operations in the bear market, and that's just not factually correct.
Totally. All right, so 10 years out, well, there's a few things, but 10 years out, where do you think the TIE will be? And to add on to that, I do think that, profitable company growing in a very space with a lot of potential growth here. I assume that you're a very attractive acquisition target. So I guess, like, 10 year out, what's the vision? But also, like, maybe get acquired like next year or something. I don't know. I'm just spitballing.
Yeah, look, we're not selling the business right now. We're not raising capital. We're not doing anything. But people sell their businesses when they're not selling, right? That just means the number is higher than when they are selling. So, we're not doing anything in particular. Look, we've really hit, kind of inflection point where we found a lot of things that are working. We found traction in a lot of different areas of the business and, are starting to see, real material scale. And we think, the next 3 years will quadruple, the business, hopefully, if not more. And so I'm focused on growth, growing the business, generating profit, I don't know, maybe in the future we can even issue dividends to shareholders. We're not there yet. We need to shore up the balance sheet and grow. Like, we're not quite there yet. But as you think about a few years from now, that would be kind of a nice place to be. But for me, it's all about, like, look, we want to, own the market. We want to control the market. We want to grow with our customers. We want to launch different products and services that help them. Whether we're doing that on our own or part of a different organization is, who knows? But for now, it's all about, like, growth and profitability. I operate this business as if, it's my business and I want to take home cash from the business at some point, right? And so we're not gonna ever be the, hey, raise $100 million and throw all the money and hyperscale, because I think, as we've seen with a lot of businesses in crypto, it just doesn't work. It's not a great solution. So for us, it's really about, I have an EBITDA target for this year. Like, we're EBITDA focused. So, and I think eventually crypto companies are going to sell at a multiple of EBITDA, not a multiple of revenue. And so it's all about EBITDA for us.
Amazing. Awesome. All right. So you have good insight into this potentially, but I don't know if you can talk about it. Are you seeing the institutions, or you can talk about maybe from a high level, are institutions focused on any sort of specific narratives right now? Like, or is it just like primarily Bitcoin and ETF is taking up the majority of mind share, or anything else that's bubbling up that you're like, oh, that's interesting that they're talking about Solana or whatever?
I mean, again, institutions are a very broad narrative,
True.
a broad word. Sorry. So it really depends. I mean, I think stablecoins obviously are a big part of the conversation these days. Um, Tokenization, I think, is a real like it's really whether or not it turns into something over time is a different story. But it's really being talked about a lot of these firms, and it's people are giving it a go. Um, I think the big thing to me, and I mentioned this earlier, is ETFs, and it's just getting other assets listed as ETFs, getting multi-asset ETFs off the ground, um, and building differentiated products. I think that's going to be the narrative.
How do you personally feel about tokenized equities? Do you think that they're compelling, or you think like, oh no, the system works now, we don't necessarily?
Well, and I think if you can trade equities 24/7, 365, and immediately low fees, there's a benefit of doing that. So, yeah, I mean, I think there's a difference between what people in crypto have tokenized versus what TradFi wants to do. Like tokenized money market funds, who's the real customer for that product? Um, there's a question mark there versus are there things that you can internally tokenize within organizations? Uh, you know, can you tokenize payments between banks and things to make them faster and more efficient? Like I think there's a lot of real stuff going on. And I'm not saying that money market funds don't make any sense because I think there's some reasons why they do make sense, but often a lot of the money market funds that are tokenized are just like you see like, oh, it's 300 mil in TVL, but that 300 mil came from a foundation's uh, balance sheet in order to get that tokenization service to work with them. So yeah, I mean, I think there's definitely real activity and there's real things that are occurring there. And I think we'll see that play out over the next 2 years.
All right, Josh, this has been amazing, but it's time for the closing questions. All right. What's your boldest prediction for the next 5 years within the crypto markets?
I'm not Jim Cramer, but whenever I say, you might want to inverse here. My boldest prediction for crypto over the next 5 years, I think that a lot of the winners in this space are going to be TradFi organizations, not crypto. I think that you will get to a point where, especially on like the market making, systematic trading side, where there's some very sophisticated funds that can afford to pay millions of dollars a year to quant researchers and stuff to hire them to get them trading. And by the way that TradFi firms might win might just be by buying crypto companies too, right? So it might be somebody might come in and swoop up Anchorage or BitGo or, Copper or Fireblocks and things like that. But I think you're going to start to see, especially look, if you're a traditional fund manager, you'd rather do business with Goldman than, somebody else. You're already custodying your assets with BNY Mellon. I think there's a lot of benefit there. So I think, I don't know if that's really bold, but I do think within 5 years, a lot of the financial services part of this industry, a lot of the trading, maybe not the venture side as much, because I think for the venture side, you really do need to have domain expertise. But I think on the trading side, a lot of that, especially from a systematic perspective, is going to be owned by.
Totally. It's like, how can you as a, I don't know, not to call it anyone, but like a Wintermute, how can Wintermute compete with a Jane Street or a Jump? It's like, they can compete on something.
Apple, because they are, and they're crushing it. Okay, here we go. How can historically people with 3 people, like in crypto, people with 2 people and $2 million have launched a quant fund, or right. I just don't think that's where you'll be able to compete anymore. I think Wintermute is also part of that. Is do that particularly well and has a particularly fantastic team. But I think there aren't that many Wintermutes in this.
Correct. Totally. All right. So you're not allowed to work on the tie. You can do anything but that. What would you be working on?
It depends on the financial situation. So is it I have infinite cash and can
let's pretend you have infinite cash, or then the other alternative, you do not have infinite cash.
I think on the infinite cash side, would probably start a nonprofit or run a number of different nonprofits. So for me, it would be about doing things that I'm, passionate. I mean, I love what I do. I have a lot of fun. I love building shit. But I think it would be cool. I think there's lots of different things in the world that I think would be cool to work on. In terms of if I didn't have infinite cash, I actually think about this question a lot. Like, what if something went wrong with the tie? And hopefully that's not the case. And, we have a lot of things going for us. What would I do? I don't know. I think my favorite thing is to do BD and go to market and stuff. So probably go to. I mean, I think my skill set at this point is I know a lot of people in crypto, and so go run BD, sales, go to market for a larger company in the space.
That's awesome. Very cool. All right. What is the best advice you've ever received?
I think the best advice I've ever received is when I've been told not to do something, as opposed to being told to do something. So when you talk to somebody who's very experienced, who's done something before, and they're like, this type of partnership doesn't work. This type of agreement never works. Here's 7 examples of why it didn't work. Oftentimes I ask people what not to do as much as I ask them what to do. Because there's obviously, there's obviously things that are specific in this space, that are more niche, that are more like, hey, like if I talk to people that were, at large traditional financial data companies or whatever in the past, they know a lot more about what doesn't work. They don't necessarily know exactly what works in this space. So it's been listening to people and I think avoiding a lot of mistakes. I think a lot of part of the reason we're able to operate so lean for so many years is because I was really careful with where we were putting all of our, I mean, not that many chips. That's like 1 Bitcoin at this point. Basically, we started a company with 1 Bitcoin effectively. I mean, now it's like 1.2 given how terrible the market looks.
Well, okay. I think that's super valuable. Yeah, people always ask, what should I do? But asking what not to do is probably even more valuable than the alternative. So very cool. Which trend is currently overhyped, or which trend is currently underhyped, in your opinion?
I think underhyped is, and this isn't like a trend. I'm not an investor, right? Like I'm not looking at sectors and stuff like that and able to give you the best answer. I'm sure you have plenty of guesses. I'm sure you're way more capable of doing that than me. I just give data on that. I think the thing that's underhyped right now is the impact of all of this regulatory change. I think we're so negative right now on everything that's going on in the space. Like everyone is so down, in the gutter. Oh, the Fed's not going to cut rates. We're going to go into a recession. We're so tied to macro, all of that kind of stuff. And I think a lot of that is true. But I do think just the impact of like removing barriers for banks to custody and offer trading of Bitcoin, that's a huge deal. Creating regulatory regimes where people aren't afraid to operate in the US, where like there are a lot of these prop trading firms that set up shop outside of the US. Maybe they're going to come back and they're going to be able to do more. Maybe they're going to get more active in venture investing again. I mean, I think and there's so many different things, there's so many bills and things that are getting passed. I mean, the fact that like XRP, not only do they win their suit, Ripple's asking for the money back now because they're like, all right, well, you changed your tune, give us the money back. I mean, I think that it might take some time for the dust to all settle because there's the Ukraine war. There's so many things that are going on around the world that are, causing, like a macroeconomic uncertainty and things like that. But I think underhyped is just how big the impact of all this regulatory change will be in the long run. Overhyped of, that's a good question. I mean, right now, nothing in the market is overhyped. I mean, everyone is just negative on everything. So I don't know, like what's, I also think on the underhyped side, and I could be wrong here to add one more piece. I don't think ETH is worth $1 trillion, but I do think when something gets killed so much, it tends to have a bounce back at some point in time. I mean, I remember like, I don't know how long you've been in crypto for, but like, I remember in 2017, 2018, the reason that ETH ran up was because of ICOs. It wasn't any narrative to do with Ethereum itself. It's because you needed ETH to participate in ICOs. And so people bought a ton. And then ETH crashed. And then the sound money narrative started taking off. And the internet computer narrative and things like that started taking off. And so I don't think that ETH is on its final deathbed quite yet. That doesn't mean it can't go down by 50%. But I think that it's taken too many arrows to the heart. I think I think the market the market tends to correct itself. And so I think it might at some point.
I love your underhyped. I agree with you. I think the changes in, government posture towards crypto and just institutional awareness, institutional stance is incredible and not talked about enough in a positive light. And then for ETH, I mean, my personal bags are heavy right now. So I hope that you are correct. And
there will be some other narrative at some point.
21, it was people needed ETH to buy NFTs, right?
And for DeFi to pay gas fees, yeah.
Well, yeah, that was like what, 19?
No. A DeFi summer like 2020, 2021. People need. I mean, the amount of money I don't know if you guys remember. There is fees.wtf where you could go and you waste on gas.
It's too painful. Too painful to view that.
It's painful. And luckily I don't really trade anymore. I haven't traded since DeFi summer. I pretty much just hold long crypto. I mostly hold Bitcoin at this point, but I hold a bunch of other like L1s and other assets or whatever. But yeah, I mean, like I was super engaged with that. But look, there'll be something else at some point.
Totally. All right, last question. What does success look like for you?
That's a great question. I mean, I think there's successes every single day, and then there's longer term successes. And so, yeah, I don't know. I don't like. I always want more. I always want to do more, and so there's always short term successes versus longer term successes. I think the ultimate success as a business founder and a business owner is to have an exit at some point. And so you're not successful until you see the other end of this. It's not like we had a TGE and then, we had a token that, you'd have an exit on, right? Like I've taken 0 secondaries as a founder throughout the entire, 8 years of doing this. Like I'm all in on this thing, and there are successes and there's growth. And I think, we have targets and KPIs internally around, revenue and EBITDA and margins and all that kind of stuff. But ultimately, I think, when I'll say successful, when I will hopefully be able to say I'm successful is when at some point in whatever form that is, there is an exit of the company. And I'm not suggesting that's going to happen in the next year or two, but
Amazing.
by the way, I didn't tell you what I thought was overhyped, but I don't think I have a good.
Oh, wait, no, well, tell me.
I don't know. I don't think I have a good answer to that question. So I don't think anyone.
Well, do you have a answer? Any sort of answer would be great.
What is overhyped right now? Because I told you I was actually going to answer all your questions. You said I could dance around them. I'm trying to ask you the questions. What is overhyped? I thought the AI narrative was a bit overhyped for a while.
Okay.
You think it gets a little bit? Yeah.
There you go. Yeah, meme coins 2.0. I agree with you. I think that's I think there's something there. Obviously.
There's real stuff there, but look in crypto and all these markets, some real stuff emerged. Like I still remember 2017, Kodak decided that they were going to launch a miner. There was a company called Long Island Iced Tea that rebranded as
No, it was like Long Blockchain.
Long Blockchain. Yeah. So like you always get your grifters and your garbage, and there's there, but I think the AI space had a particular amount. Like people just put the word AI on their protocol. Not everything needs to be AI. Not everything in the world is AI. Like it's okay not to be an AI protocol.
Totally. Love it. All right, sir. Where can people find more about yourself and learn more about the TIE?
Yeah, you can find out about the TIE at our website, thetie.io. You can also follow us on Twitter at thetie.io. I also have a personal Twitter account. I'm not the most active on Twitter. I generally will just like bitch about the Knicks and my other sports teams, but you could follow me as well. I don't even know what my Twitter account is. It's at Joshua_Frank_. So
there we go. But the important thing is the tie.io.
Yes, or the TIE.io Twitter account.
Perfect. All right, sir. Thank you, man. Appreciate it. We will chat soon.
All right. Thanks for having me on.